Okay, hi, sorry about that. I think Aidan was just checking the record button. Okay, we're back here. Okay, we want to look at the whole week, data and events and news, etc. coming out. So we click on this week. One of the first things I'd like to do, as I was just saying, is have a quick peek at what happened last week, because quite an interesting week, really. And to do that, if you see this calendar on your left-hand side here, if you click on this weekly view, you can actually see what happened the previous week. So I'm just bringing up last week's data, not because I want to bore you or anything, but just to let you know what actually happened on Friday. Of course, Friday was marred a little bit by something called the ISDA deliberation. I'll go on about that in a second. But actually, the news that we were looking for, that was the Chinese inflation, that was down quite a bit. So we were expecting a figure of around 3.5%, which would have been a good improvement from the previous month of 4.5%, and that came out at 3.2%. Quite positive, and that's given the market encouragement that we might actually see further cuts from the Chinese administration to help perhaps free up further demand, because the economy, there are question marks over it sort of faltering a little bit. And then obviously the key bit of data, and I won't go into all the other bits of data, but obviously the key bit of data, this non-farm payroll has reverberations for quite a time during the trading month. And that actually came out better than expected. Not only did we beat expectations of 227,000 new jobs, we also had the previous month updated, which was an improvement from 243,000 to 284,000. It's very important. Jobs, basically, if jobs are being created, it's a definite sign that there's an improvement in economic activity. So quite a positive end to the week. However, let's do the howevers. And let's get on to this week now. So just go to the weekly view. Okay, we're back looking at this week, everybody. The however is we had ISDA, and I'm sure you're probably wondering what the hell ISDA is. It's the International Swaps and Derivatives Association. They're a group that deliberates on credit events, apart from anything else. They deliberated at the beginning of last week about the Greek bond issue and the PSI, the private sector initiative, where all the bondholders are taking a haircut, or more to the point, a head cut. Actually, they ruled that it wasn't a default, but when the terms became clear, they had a further meeting on Friday, which started at 1 o'clock or at midday our time, and the news didn't come out till about 5. But they've ruled that there has been a credit event, i.e. a selective default, and that's triggered these payments between Newman and Gatepost. These credit default swaps. There weren't so many out there, and I think a lot of people were fully expecting a credit event to be declared, and so it triggers roughly 3 billion euros in payments to those who hold those bonds, underwritten by those people who underwrote them in the first place. So they'll be paying, and the people who receive the payments are the holders of those bonds. So that was really a little bit of a problem on Friday. But we saw a little bit of a dislocation actually on Friday, and I'm just going to bring up the markets now. We actually saw equities sort of flat, really. But actually, the euro or the dollar rallied, the euro weakened, and also precious metals rallied. So it's a bit of a mixed picture, really. But it seems certainly that the precious metals, gold, silver, are dislocating a little bit from the dollar. Normally, when the dollar rallies, precious metals come off. You'd expect gold and silver. I mean, gold was down at sort of the lows there. Look at just where my cursor is. It hit the bottom of the envelope there, and then rallied. Golly, it must have been a good $30 towards the close on Friday. So, there's some interesting moves taking place there. Overnight, we've had the Chinese news out. They've had we had their trade deficit. Let me quickly go back to that now. So we've had the... whereabouts is it? Here, Monday. Okay, it's not actually listed here, but we've had the Chinese trade deficit numbers. Basically, it was quite a weak number. I think that was Actually, I might be just no. In fact, sorry, forget about the trade deficit. Chinese trade deficit. That was an old bit of data. I apologise about that. Okay, so overnight, really, just a slight improvement. In fact, the markets are fairly sort of flat to slightly weaker overnight. Let's look on the data now. Okay, this week, first of all, daylight savings, everybody. People have asked me what that means. It basically means we call it British summertime, or you can call it American summertime. The markets will open an hour early today, and this lasts. Adrian, when is our summertime start? Is it a couple of weeks' time? Is it? It's next weekend. Okay, we've only got a week of this. In the past, we have had anything up to 2 or 3 weeks of this where the markets open early. So the American market will have a lot more of an influence earlier on in the trading day. So remember, data that normally comes out at 1:30 will be coming out at 12:30. Equity markets in the US will open at 1:30, normally 2:30. Okay, so it is 2 weeks. So we've got 2 weeks of this basically, and it tends to actually make more of an interesting sort of time, especially if the US is having that sort of an impact on the markets. So that's something that may help us a little bit. We might get some more sort of better flow in the markets. Okay, so that's daylight savings. Other than that, let's start with the key bits of data this week. It is the US interest rate news that's coming out on Tuesday. We normally have a 2-day meeting, but in fact this week it's going to be just a 1-day meeting. That's the Federal Open Markets Committee. Let's just show you where they have. Here we go. The FOMC statement. FOMC stands for Federal Open Market Committee. They're the rate setting committee for the Federal Reserve. They meet monthly. And normally it's a 2-day meeting, but the fact that it's a 1-day meeting and there is no press conference, when there is, I thought it was the week after. Alison, what are you referring to there, Alison? If you can let me know, I'll see if I can respond to that. So we normally have a 2-day meeting. It's a 1-day meeting, so no press conference. Highly unlikely that there's going to be any change in economic policy. And I think it's rather, with the sort of very positive news from the unemployment data on Friday, it's highly unlikely that we're going to get any announcement. And also, I think one of the things that's sort of dampening down sentiment this morning and on Friday is the fact that we're unlikely to get a third round of quantitative easing. That had been very much on the cards at one stage, but I think all these sort of equity bulls, unfortunately, I think are going to be a little bit disappointed because I think it's highly unlikely, especially as these numbers continue to improve, that the Fed will engage in a third round of QE. Okay, for the rest of the week, Monday and Tuesday, well, we've actually got the Eurozone finance ministers are meeting Monday and Tuesday, and guess what they're going to be talking about? Nearly off the agenda, Greece, yes, and it's to do with the settlement of these transactions, this debt swap, which actually is concluded today, so that's going to be quite important. Well, Tuesday we've already discussed with the rate meeting. Wednesday, we've got further data in Japan that's quite important. That's the industrial production numbers and also the Bank of Japan's monthly report. Other than that, let's just jump ahead here. Tuesday, actually, that's something I missed. On Tuesday, we've also got retail sales in the States. That's pretty important. It's a high impact number. Remember, it's coming out an hour earlier, so we're getting that at 12:30, not 1:30. And another improvement. So, we had a slight pullback in January, but this February number is looking quite good at 1.1%. On what's the next bit of data? I think that's on Thursday. Yeah, it's mostly industrial production. Last week we had a lot of data. Really, this week is a little bit disappointing. Well, disappointing. That's the way it works. There's a lot of data one week, and then it tends to contract and disappear. If it was a 4-hour difference, but you corrected yourselves. Good point. Thanks, Alison. Thursday, we've got, as I say, the industrial sort of performance data. These are called the manufacturing index from both New York and Philadelphia. One comes out before the other one, 12:30. Empire State, that's New York. But believe it or not, New York State's a very big state, and it has a very high proportion of manufacturing within it, and that's closely watched. Bit of a pullback from the previous week, but still pretty good, just easing back slightly in March, whilst the Philly Fed actually is expected to move ahead again, a figure of 11.8 after 10.2. So again, fairly sort of positive, really. All the data that we're seeing coming out of the US seems to be a positive and continues to reinforce, actually, strength in the dollar, which remains fairly well bid on the exchanges, 131.09 on dollar euro. So, I think that'll continue to be the case. Friday, we have industrial production data. Let's just have a quick look. US, that comes out instead of 215, 115. We're looking for a further improvement there with a flat figure in February. For March, we're looking for a figure of plus 0.4%. So fairly positive there. Other than that, I've just been asked UK data. UK data on Wednesday. This is the only bit of data really worth looking at in the UK, is our unemployment data. We're looking for a figure of unchanged at 8.4%. But otherwise, I think equity markets will probably wait until Tuesday's rate announcement is out the way. I think the market is digesting the unemployment data from Friday. I think generally equity markets remain fairly buoyant, but I think the market is having to come to terms with the fact that it won't get any further help from the Fed in terms of a third round of QE. And as I said, in China, we are looking for the Chinese authorities perhaps to ease further in the coming days as their data looks a little bit soft. Export data, their trade deficit was a fairly substantial number as they imported massive amounts of commodities and their export slumped. So we do expect the conditions there to warrant further easing from the Chinese authorities. That's a summary of what's going on. Thanks very much for listening. I'm going to put you on mute just for a second while I pass you over to Adrian. Good luck with the week, and thanks very much for listening.